Your credit score is a major indicator of your financial stability. Credit scores are quick indicators to lenders of borrower reliability when applying for credit. A higher credit score improves your chances of being approved for new lines of credit and loans for your business. In addition, if your credit score is high, you may qualify for better interest rates on loans. You can begin working toward a higher credit score immediately by taking advantage of a few simple strategies, and while the actual uptick in your score may take some time, you will see results quickly. First, take advantage of the following recommendations by checking your credit reports and credit history. Can be a great asset in determining whether your financial situation is favorable or unfavorable. After obtaining a copy of your credit report, you should review it carefully to find out what factors are helping or hurting your score, such as whether or not you have a history of making payments on time, very few outstanding balances across a number of credit card and loan accounts, having credit accounts that are several years old, and having a low number of credit inquiries are both good for your score. Mr. Late payments, high credit card balances, collections, and judgments are all huge detractors from credit scores. You can finish up in a single afternoon. Consequently, it is in your best interest to routinely review your credit report for any discrepancies. However, make sure to only ask soft questions so as not to hurt your credit. Find out if your bank offers this service and how to sign up for it, in order for you to be notified of any changes to your credit score. If you take advantage of the free credit monitoring that many banks offer their customers, you can stay abreast of any changes to your credit score and take steps to raise it. Number 1 strategy for paying off credit card debt. Paying off your credit card balances in full every month is the simplest way to keep your credit utilization in check, as it is the percentage of your available credit that you are actually using. Another rule of thumb to follow is to never use more than 30% of your available credit on any given card. It is recommended that you get this number down to 10% or less if you want to raise your credit score, given that your creditworthiness is dependent on your total balance. As soon as the credit card company updates the relevant credit bureaus, you should keep it low by either paying it off completely before the end of the billing cycle or by making several smaller payments throughout the month to ensure that your balance is always kept at a minimum. Payment history and credit utilization are two of the main factors in determining your credit score, so this strategy can have a major effect. If you're worried about forgetting to make your payments on time, you can set calendar reminders to prompt you to sign in and make payments. There may also be an alert feature built into your credit card accounts that will notify you when your balance reaches a certain threshold. This solution starts working as soon as your credit card company updates the credit bureaus with the new, lower balance. Reducing your credit utilization ratio can also be accomplished by requesting an increase in your credit limit, which will be factored into your score. If you keep your balance the same, increasing your credit card limit can help your credit utilization ratio. It is possible to request a higher credit limit from the majority of card issuers online. In less than a minute, you can update your annual household income and find out if your increased limit has been approved. You can also request a higher credit limit over the phone. Here's a suggestion: if raising your credit score is something you're serious about doing, the third piece of advice can unquestionably be put into practice in the context of making timely bill payments. If payments are past due, there is no credit repair program that will work any better. The negative effects of late payments can remain on your credit report for as long as 78 years. Don't waste any time and contact the creditor. If you are more than 30 days late with a payment, contact your creditor as soon as possible to see if they will stop reporting the late payment. Paying the bill in full as soon as possible is recommended regardless of the creditor's response. Every month, your credit rating takes a hit. You can see that the account has been marked as delinquent. The most important factor in determining your credit score is how timely you have been with your payments. This is why it is preferable to clear one's debts so that they do not appear on a credit report. Therefore, it benefits you. How quickly it works depends on how often you've missed payments in the past, assuming you pay the debts back on time, plus the money. Though paying on time is crucial, it's good to know that the negative effects of late payments fade with time, and that having more positive credit histories can speed up this process. As a result, the simplest way to raise your credit score is to never be late with a payment. Creating a paper or digital filing system to manage your monthly bills is a means to that end. Automatic bill payments from a bank account can be set up with due date alerts. That will notify you before a payment is due. You can avoid interest by charging all or part of your monthly bill payments to a credit card. This method presumes that you will make full monthly payments. By establishing a track record of prompt payments, you may find it easier to pay your bills and raise your credit score. Always pay your bills on time, and stay away from interest-bearing debt. Reduce the number of hard inquiries made when applying for new credit. As suggested in point number 4, he often differentiated between hard and soft credit inquiries. An example of a soft inquiry would be if you checked your own credit and then let a potential employer see that information. Your regular banks and credit card issuers may pull your credit report and score to see if they should send you pre-approved credit offers. Credit scores are not affected by soft inquiries. However, hard inquiries, such as those for a new credit card, mortgage, auto loan, or any other type of new credit, can have a negative effect on your score for up to 2 years. In all likelihood, a few challenging questions here and there won't make much a difference. A negative impact on your credit score can result from too many inquiries too quickly. A higher risk is associated with people who need loans, which banks may see as if you ask for money. Therefore, if your goal is to raise your credit score, you should put off applying for any new lines of credit until you have improved your current ones. Your credit score will increase after you delete any hard inquiries that have been reported. Recent hard inquiries only account for 10% of your total score rating. Even though you should try to get any inappropriate questions taken down, it might not make a huge difference. New user number 5 asked to be added as an authorized user. If you know someone with a high credit limit and a good history of making payments on time, you might be able to borrow some of that money. But to be safe, verify that you can trust the friend or relative and that the account reports to the major credit bureaus. Your credit report will now include this account. The credit limit may help your authorized user standing. In other words, you can benefit from the primary user's excellent payment history by piggybacking on their credit. The benefit is that it helps your credit score even if the cardholder doesn't give you permission to use the card or even the account number. For those with an established credit history who are working to rectify past mistakes or lower their credit utilization, this could have a significant impact, especially if their credit history is short and shaky. The impact will be diminished. In addition, you'll need to have a conversation with the account holder you're asking for this favor from and agree on whether or not you'll be given access to the card, or if you'll just be added as a user with permission. When you add your information to the account and the account owner reports to the bureau, your credit score will quickly increase. Assuming the person you want to add as an authorized user has a secure account and is someone you can trust, this is a method that will be easy to apply. If you've had trouble with the other approaches, maintain active customer accounts and address past due balances. Your financial records. When considering whether or not to close more recent credit accounts, age and length of credit history are key considerations. In terms of your credit ratings, the length of time you've had credit accounts is one factor reviewed. Lenders are more likely to give you a loan if you are transparent. Don't close any unused cards if your credit age is getting on in years. Doing so will reduce your available credit and increase your credit utilization ratio. Your credit report will still reflect the payment history of those accounts. Your score could drop as a result of that. Attend to any charge-offs, collections, or overdue bills you may have. That includes the Mr. Relate Payments account you have. Your payment history will improve if you are able to work out a plan that allows you to make your payments on time going forward. Consider whether it's better to pay off the accounts in full or to offer the creditor a settlement, even if doing so won't cancel the overdue payments. Paying off charge officer collections may provide a slight score increase if you have such accounts. Consider consolidating your debt. However, be aware that enrolling in a debt consolidation program may temporarily lower your credit score. Bankruptcy records remain on your credit report for 10 years, and negative account information can remain for up to 7 years. If you were able to make your payments on time, however, your credit score will quickly improve, and you will eventually be free of the debt that was causing you so much trouble. You could save money by getting a debt consolidation loan from a financial institution and using the money to settle all of your debts at once. If you have several, consolidating them into one loan with a lower interest rate could improve Your credit score and debt-to-income ratio. Because you'll only have to keep track of one payment each month. Another method is to consolidate your debt by paying off all of your credit card balances with a balance transfer card during the card's promotional period, during which the interest rate on the transferred balance is typically 0%. However, as with the previous strategy, you should be wary of the balance transfer fee, which can range from 3 to 5% of the transferred amount. Prioritize paying down your highest interest credit card balances. If you have multiple credit cards and are close to maxing out one or more of them, you should prioritize paying off the card with the highest credit utilization rate. If you followed recommendation number 9, your credit score would have gone up. Searching for a loan provider quickly. Consider applying for a short-term loan if you need money quickly and can't improve your credit rating in any other way. These are small loans that can help your credit if you use them sparingly, because the lenders will report your payments to the credit bureaus. If you decide to make use of this, improving your credit score should be a top priority, especially if you need financial backing to make a sizable purchase for your company. It may take a few weeks or months for your efforts to improve your score to begin showing, but you should stay the course. I pray you have found this information to be helpful and that you were able to put these suggestions into practice with positive results. If you liked this, please leave a comment and give it a thumbs up. I hope some of these suggestions were helpful. Until we meet again, take care.